Some of you guys may not know this, but I am an avid mountain biker, and sometimes when you do that kind of stuff and you go down these crazy sort of courses, you take a tumble, when you take a little bit too much risk or maybe don't pay attention. And so here we are. So I broke my wrist last weekend, and the reason I'm telling you this is because risk management should always come first. So in my case, I was a little bit tired. We'd just been driving for a bit, and then when we got to the mountains, I figured I'd do one quick spin down this crazy course before dinner, and sure enough, boom. In trading, however, you know, it's even more important, I guess. Well, I guess it's both important in both things, both in general life as well as in trading, to be risk averse, or at least risk managing first. And we always talk about that here, of course, in the videos, and it's certainly to my clients as well. Also, because of this situation, I'm going to be a little bit slower this week to respond to things. I'm probably going to have to take a day off or so at some point this week because this thing really hurts. Anyway, I wanted to show you guys a trade today that I've mentioned here before that is something that really helps you to make money in choppy markets, because choppy markets, you really have to either tighten your time frame or really expand it. And so, but the thing about choppy markets is that they're mean reverting. So there's a lot of mean reversion going on. So if something goes up, usually it'll go back down. If it goes down, it goes back up, right? So there's mean reversion area. And so I think we just, well, let's just have a look at this so you can get an idea of what this looks like. And so this is a trade from last week. In fact, last Friday, I guess what was it, the 13th of July, I think it was. And this is shares of JP Morgan. And again, each one of these is 1 day. And in this case, we have a 15-minute chart. And so one of the things you can do is you can trade these open gaps. And we've showed this on here before, but you can take it a step further and just look for strong bullish or bearish reversal. So you can see the second 15-minute bar here gave a strong seller exhaustion. You can see that right here, right on this bar. And then we had follow through buying the next 5-minute bar. And from the trough to the peak, the stock rallied about 2.3%. Even if you only bought it here and you just bought, like, say, one call option or even the stock, you would have made some nice money. And so this is all based around the opening sort of 30 to 60 to 90 minutes of trading where there's a lot of opportunity. And you can see, indeed, here as the market tried to break lower, because the market was choppy, it mean reverted right back in here, right? And vice versa, when it got up here to the upper end of this range, it mean reverted back down. So that's a very, simple but an unbelievably powerful way to make money in choppy markets. And I'm going to do a special webinar. We've done one or two of these before, but I'd like to do another one because the market is really choppy. So join us Tuesday, July 13th. We can talk about how to trade the gap. And I'm going to take it a step further this time. And we're going to talk about not only just the gap, but also all the stuff around it. Because again, like the first 60 to 90 minutes of the trading day are very, very powerful to take advantage of opportunities like these. So make sure you join us Tuesday, July 17th and learn all this kind of stuff. In the meantime, I am going to actually have to go to the doctor again right now. There may do some minor surgery, maybe. I'm not sure. But I got to give it a rest, and I'll see you guys soon.